Good morning, everybody. How are we all doing? Morning, Mark. Morning, Evil. Morning, Soul. Morning, Rumo. Morning, Chris. Morning, Gregors. Paul, how are we doing? Happy Friday. Finally. Friday. We like Fridays. A lot of people don't like Fridays because they can't trade on Saturdays and Sundays because they live for trading. But anyway, I do. Right. Market's just opened. We got a bit of pre-market movement. First 5-minute candle before the opens. Been pretty big on the FTSE. Where's my pen? So yeah, fairly big move there. Pre-market on the FTSE this morning. Range is going in. We got 1.5 minutes left on that candle. 157. So yeah, we'll be getting a trade at the open on the FTSE on a 5-minute range. DAX at the moment, a little bit small, so we'll wait for some more movement on the DAX. Fairly good day yesterday. It was a very whippy session yesterday. Morning, Peter. Morning, Virginia. So DAX yesterday was, where are we? No trades on the DAX yesterday. Ranges were too small. FTSE yesterday, very whipsawed. So took 2 losses on yesterday's FTSE open. So we broke short, double bottomed, came back up, hit the open, triggered a long, stopped out, and then it decided to go down. But we didn't really get an awful lot of movement yesterday. So the close was there, the open didn't really do anything, did it? So didn't make anything on the FTSE yesterday morning. The S&P 500 broke short, stopped out. But then obviously we pumped yesterday. We had a fair bit of news yesterday. So broke long on the 30-minute, very nice, clean, straight to target, and then stopped out break even on the second part. NASDAQ, same thing. NASDAQ, slightly tighter stop on it. So that one closed out 2 in profit. And then the Dow didn't get the second order on that one because the 30-minute range was actually already triggered and stopped out. So unfortunately didn't manage to get that one, but ended up $300 up on the day. But whippy old open. Nothing we can do with it. It was very whippy, but strategy played out. So all good. So we'll see where we go this morning. FTSE already triggered short. So 1 short FTSE off the 5-minute range. 5-minute range on the DAX, too small. So nothing good there. Morning, Marco, Joe. Happy Friday. You are doing pre-market now with ORB? Nope, don't trade pre-market at the moment. It's on my massively long to-do list to test. So yeah, I will be testing pre-market. I haven't had a chance yet, so you can test it. Let me know. Morning, Ro. Right, so market's pushing back up again at the moment. DAX pushing up a little bit. We'll come back to that in a minute. So today we're going to do a recap of the week. Obviously, it's a bit of a short week because we had the bank holiday on Monday. But the news today is obviously Canadian unemployment. We've got Bailey speaking at 9:40 this morning. So we had Bailey speaking yesterday. This wasn't on the cards yesterday. It sneaked in there. I thought it was a bit odd not having a press conference after an interest rate decision. It wasn't actually a press conference. It was just basically speaking. But so yeah, we had all that from Bailey yesterday. We'll go through financial juice in a minute. But as you can see, it's been a fairly big week, obviously interest rate wise. We had the trade deal signed yesterday, which was fantastic for the UK. So we'll have a look at FX in a minute and just see what's going on with that. But yeah, today's news, obviously, the only thing we've got today is an hour before the market opened this afternoon. We've got unemployment rate for the Canadian dollar. So unemployment rate at the moment doesn't seem to be having a massive impact. The market, I think, is assuming because of these tariffs that we are just going to creep on unemployment, which is obviously logical. So I don't think really this is going to have a massive impact. We will get some movement off of it. We always do, but don't think we're going to be seeing sort of 150 ADRs or anything stupid like we used to. So But that's all we got today. Bailey speaking this morning. That is at a sort of a conference. So there will be audience questions from the press. So there is potential for some movement again on the pound. We have had an indication yesterday that they're going to drop rates possibly twice more this year. We're on 4.25 now for the pound. So we're closing in on that 4%. So we're definitely going to have one more. I think down to 4, possibly next month, probably the month after. And then there's potential for one more in Q3. And then obviously they'll reevaluate it. So from the pound's perspective, sort of ever so slightly bearish. There was a differential in the votes yesterday as well. So with the pound, if you look at what happened to the pound yesterday, the pound US dollar is not the best thing to look at because we had US dollar stuff going on. But yesterday, the pound obviously had a nice rally, but nothing big, nothing's really huge. If you look at the size of the candlestick that we had off the news, that's ADR. So we didn't even get an ADR hit on most of the pairs yesterday. But it's slightly bullish in the fact that the votes were slightly different, but we are dropping rates, which is bearish. So it kind of cancelled itself out. So it's difficult to tell really. Now we've got this trade deal in place, whether the market's going to want to rally or dump it. I don't think the market's really going to want to do either. So I think we're in for a little bit more continuation on this range-bound sort of price action at the moment, but we'll see. So obviously that was the interest rates. That was the trade deal. So it's basically neutral, cancelled itself out yesterday. So staying range-bound, I think, pretty much across the board on the pound at the moment. No massively bullish or bearish stance. No reason to change our mind on that at the moment. So it's just going to be pushed around by other currencies, basically. So that was the pound. Obviously, we had the Fed fund rate come out at 4.5, which is what we were forecasting. Trump, again, yesterday, really slamming into Powell. I wouldn't be surprised if a trade deal is reached with China. So yesterday, obviously, we had, here we go. Right, so I posted this in Discord yesterday. Last time he said that, he put the 90-day pause on. So what he basically did was say, now's a good time to be buying stocks. And then hours later, he basically paused all the tariffs for 90 days. The stock market had its biggest day in history, pretty much. Yeah, but after he collapsed it by the biggest week in history. So he obviously took credit for pumping it, but he didn't take the credit for crashing it. That's exactly what he said the day before he removed those tariffs, or just before he removed or paused the tariffs. So we've got lots of hints. I wouldn't be surprised if a trade deal comes in with China. Now's a good time to buy stocks. If that trade deal comes in with China and those tariffs drop, the stock market is going to go through the roof. We're going to see 300, 400, 500 ADR moves to the upside. Is it or isn't it? So this is potentially one of his little manipulate the market, tell your mates hints that he's going to pump it. But we will see. These are the comments I was saying about about Powell. Fed's Powell is always late. He said some really nasty stuff as well. Bank of England cut, China cut, everyone is cutting but Powell. Talking to Powell is like talking to a wall. Just going to look at it. Trump, if Powell would lower rates, it would be like jet fuel. It's probably Powell is probably not in love with me. No crap. But he said lots of other stuff about Powell further back, which was even worse. So, Powell's kind of between a rock and a hard place at the moment. He can't really do an awful lot. It's not unethical, but it's not the right thing to do to drop rates when inflation is sticky and stuck. The reason Trump wants the interest rates down is to encourage growth and to get the economy pumping, but that's going to send inflation and unemployment through the roof. They're already too high. So Powell's doing exactly the right thing. Obviously, Trump has just got a baseball bat and keeps hitting him over the head. He will eventually sack him if he doesn't do what he's told. So it's a difficult situation at the moment in the US, but So look at the face. So that is not a surprise. I think we will get drops on interest rates, which will obviously weaken ever so slightly the dollar. But everything at the moment is very, 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 very slow. Everything is moving very slow. So this is why we're seeing an awful lot of this sideways price action in the markets at the moment. Yeah, but there's no reason why this should change. We should just carry on seeing sideways stuff. And obviously this is Trump stuff. But most of the time we should be going, sideways a lot. So it's been an interesting week. Unemployment for New Zealand went to 5.1, which is staying at 5.1. It was forecast to go up. Again, not a lot of movement off the back of that. Still no trades on the DAX. Wasn't a lot of movement on the New Zealand dollar either. We kind of, actually there was a little bit of movement on it, but it's obviously retraced itself because there's no real directional bias off of it. So interesting week, but nothing particularly exciting. So I'm banking constantly at the moment, very small amounts every day, just to sort of build positions. But I'm finding it difficult, as I posted yesterday, to build positions at the minute because there's no movement. So everything that I'm getting into this week, Aussie New Zealand's the only thing that I'm kind of in with a couple of positions at the moment. But everything I've kind of got into this week has been straight in, straight out. So short there, straight out. In short, that's in profit at the moment, so I can bank that whenever I want to. But if you look at everything else that I've traded, Swiss yen, I took another Swiss yen short yesterday. So that short there, straight out at 1 ADR. That long there, straight in, straight out at 1 ADR. I took a short yesterday. Didn't quite get extended on the RSI, but that's where we sold it from last time, and this is where we're buying it from. As I say, if you look at all the propulsion gaps, everything is being filled because we are completely range bound. So it just makes sense at the moment just to keep playing the highs and lows until the market decides on a direction. You could be sitting in these sorts of moves for weeks and weeks and weeks. So at the minute, I'm just playing the highs and the lows. Obviously, when we get down to these areas, you're going to get RSI extensions anyway. So using the RSI dashboard, which is what I've been basically doing, is totally sensical at the moment. Makes total sense to use that. Sensical, is that even a word? Nonsensical is, but I don't know if sensical is. But anyway, so just keep playing it up and down, which is basically all I'm doing at the moment. Euro Swiss, I've got a long on at the moment. So again, took a long here at the double bottom. We had that reversal alert to the upside. We are in a slight downtrend, but this accumulation break got tested and rebought. I assumed they were going to test and rebuy, which they did. We have run straight into that propulsion gap and resold it, but obviously the propulsion gap from that buy is holding up as well. So now we're stuck between there and there. So either this is going to go down and I will add down here, or it's going to go up and I will get out up there and then probably flip short because, I'm not expecting huge swings in either direction at the moment. There is no reason to have huge swings. So weekly highs and lows, which obviously these black lines in the support resistance propulsion indicator, great places to enter. By the time you get to them, you're likely to be extended a bit, but not massively. As you can see, a lot of stuff is just not quite getting there on RSI because there's no strength in the market. Euro pound, long to that, I actually added to that. Don't usually do that, but I did. So I added my long there, but that was taken. We didn't quite get there. But, it's 1 ADRs, basically, just trying to grab an ADR out of the market because we are just flip-flopping around weekly, around about an ADR, 2 ADR and everything. Euro CAD, got out of that one yesterday. Again, reversal that went in there. That was a 3-bar reversal that I took, but it's the same thing. Retested propulsion. That was out of propulsion previously. So retested propulsion again. Decided to take it off in propulsion. Resistance. Yeah, it's bounced out of there. Could have flipped short. I didn't. But, this is all we're doing. We sit around, wait for some news, sit around. So as long as we're going to sit around, I'm playing those ranges at the moment. And just carry on playing those ranges. So pound US dollar. Sold the highs. Got out 1 ADR. Bought the range at the low. Got out 1 ADR. Look at that for an exit. Back down again. I was very, very seriously considering buying this yesterday. So when we hit this low here, I saw obviously this propulsion move, and they've been adding to this level. As soon as it hit that level, I was like, saw that little bull candle. I was like, I might get in on that. It wasn't really quite extended enough, so I didn't take it. But then we spiked through it, and I thought, right, if this rejects, I'll get in. And unfortunately, it popped. So it was way too late to get in. But I was looking to buy that yesterday. Glad I didn't, because a few hours later, the deal was signed, and obviously that's dropped the pound down, or rather, it's rallied the dollar. Yeah, so it's not really the pound dropping; it's more the dollar rallying in this case. So again, if Trump pulls those tariffs today, yeah, we're likely to see that type of movement. So if we do see that type of movement, that propulsion gap is your first target to the downside, and there's absolutely no reason why we won't just get all the way down here. This is all tariff related. So if the tariffs are undone, this is what will happen. It will just undo all these moves, won't it? But whether it's going to strengthen the dollar enough, don't know. So, but yeah, just playing around at the minute. So looking at ADRs and RSIs today, RSIs, there's no hourlies at the minute. They're all flat. So nothing really to look at all there. There's a few 4 hours. Aussie New Zealand, which I'm already in, is extended on the 4 hour still to the downside. Sorry, that's pound US dollar. To the upside, I was going to say, it's gone up. So yeah, I got one short off there and did some drawdown control. I'm in 3 trades in the position at the moment. Next one's going in at resistance. So we've got that support there. Broke, propulsion gap, resold. So that is your support resistance area, which is around about 150 ADR today. So my next entry is going in above ADR. So anywhere up here, I'll be shorting and obviously move the average up, and then looking for a pullback on that leg. So I'm looking for a high, low, lower high drop. Euro US dollar at the minute extended to the downside. It's a nice rejection to the downside. You are buying straight into propulsion. Could go either way, that. Yeah, it's a lot more downside on this. I think we're going to come down and test this area here. So today, if you want a short opportunity today, we've got these lows here, this previous propulsion gap, which they rebought. Yeah, yesterday, we slammed straight through that propulsion gap and formed a new downside propulsion gap. So today, any kind of price action which is bearish out of this area, that's a double weekly low. Any bearish price action out of there, that propulsion gap is likely to hold, and then we're going to drop. So Euro US dollar today, first stop really is 175 ADR, loads of room to the downside. So good looking opportunity there. It's extended to the downside, or was extended to the downside this morning on the hourly. It is extended on the 4 hourly, but it's one of those, yes, it is extended to the downside, but there's more downside potential. And we've just been sitting around here for the last 1, 2, 3, 4 roughly weeks, trying to go higher and failing. Yeah, so you got kind of a head and shoulders, which is failing here, but that has got double shoulder on it. That's just broken. So a retest and a drop of that is going to give you a beautiful big downside trade. Going to need some strong US dollar though, which obviously at the minute, if Trump says something nice to China, that's going to happen, isn't it? So there's an opportunity. New Zealand is obviously the opposite of the RSI at the moment, but New Zealand dollar, US dollar is extended as well. Let me just quickly look at the indices. Okay, so DAX 15-minute range is in. So I'll be taking a trade off the 15-minute range on the DAX. Just attempted new highs on the DAX, but failed. 3-bar reversal. So looks like an upside auction failure. Yeah, looking good potentially today for shorts, but not really an awful lot of movement at the minute. So New Zealand dollar, US dollar, that's extended to the downside. 4-hour RSI extension here. But again, it's very much the same. So this US dollar got a kick yesterday. As you can see, everything got a kick yesterday on the US dollar. So if this is the start of a rally into the US, all of these breaks that we're seeing below recent support are potentially going to just tumble back down into where these moves started from. So it's a very tricky RSI extension to the downside. It's potentially a lovely support bounce, but if that support fails, you've got to be ready for a drop of that magnitude over the next week or two. So if you're going to scale into positions, just bear in mind, don't get in too close, because it's not going to do this. I mean, didn't think it would do that in the first place, did we? But it's unlikely to be that parabolic unless there is something announced to do with China, i.e. let's scrap all the 145 and everybody go back to 10% again. Then, yeah, we'll be down here literally by Wednesday next week, won't we? So just bear that in mind when you're trading the dollar at the moment. Yeah, it's Trump. Trump moves the dollar, nothing else at the minute. Doesn't matter what the fundamentals say, doesn't matter what Powell says, Trump moves it. So it's a tricky, slightly dangerous thing to be involved in at the moment from a position trading perspective. If you're using stops, no problem at all. So look for a push back up into propulsion. If we re-break that low today, off we go. Yeah. So pullbacks basically today are probably the best thing to look for into propulsion. So there's a lovely support resistance propulsion bounce there. You got support area there as well, tapped into previous support there. Yeah, so all these propulsion gaps to the upside, potential good selling places today. However, if this low is holding, this propulsion move here, which we bought again, yeah, that's holding on that 3-bar reversal, we could just sit up here for another week. Yeah, all down to what Trump says. Yeah, so we'll see. But there is an opportunity there, New Zealand dollar, US dollar. There's a long right now, but obviously it's one of those longs I just don't like taking. There's way too much gap to the downside. This is clear air. There's actually no support available. The support available here, which we did test, which is a monthly high. So if you're going to buy the monthly high because you believe the dollar is going to remain weak, that's where you'll buy it. If you're not, it's just nowhere for it to go, straight down. So could be a big drop. US dollar CAD. So again, same situation. We've got an RSI extension to the upside, but it is a double weekly break. So there's last week's high, previous week's high. We've just broken both of those highs. If we hold here this week, it's a breakout. So there's potential for a push back up into these old propulsion gaps. Whether we can get back to the origin of the Trump move, I don't know. But easily 175 ADR to the upside. But if this resistance has proved too much and they've run out of steam, we will pop back down into there potentially today or early next week. So these propulsion gaps to the downside. Whenever you've got propulsion gaps in both directions, it's fairly easy to plan a trade because it doesn't matter which way you go. If you believe this is a breakout, then go long. Yeah. But if you're going to go long, probably not best to go long all the way up here. It might be flag breaking, which is fine. But if you go long and it doesn't work out, you've got a very easy scaling down here for a new leg back up. If you believe this is a false breakout, you go short right now on the RSI extension and you mean revert it back into those propulsion gaps. And that's where you would take your profit. So if it works, brilliant. If you short it and it doesn't work, you've got a propulsion gap at resistance here at about 150 ADR. Then you've got another resistance up there, which is going to be a roughly 1 ADR away. And then you've got that previous monthly support, which turned into resistance, roughly 3/4 of an ADR away from that. So there's your trade plan. Short, second, third, fourth, average here. Wait for the pullback on that leg before it continues up. Exit. Yeah, so you've got propulsion gaps. When you've got propulsion to the upside and the downside, doesn't matter which way you go. You've got no idea which way it's going. The market's going to decide which way it goes. You pick one. Basically, it's a 50-50 shot, isn't it? But it's nice to have a nice, easy plan. You know, it's either going there or there. 100% guaranteed. One of those is getting taken out. That's it. Fact. So you just plan which way you're going to go. But right now, if you're mean reversion bear you're shorting it. If you're a bull, you're waiting for a pullback into there, and then you're going to buy it out of that. US dollar yen. So I got into this this week. Here, I bought the lows again. I was looking for a higher low to go in, and then I was looking for a retest of the highs. I got out early on that propulsion gap. It flew straight through it. But so yeah, got out of that. That was one ADR again yesterday. But now we are extended to the upside. Reverse alert at resistance. Double wicks to the upside. M pattern. Beautiful. Absolute textbook. Missed it. I was asleep. But anyway, if you were using the EA's got you into that already short. But that is also a 4-hour RSI extension as well. So yeah. Watch this propulsion gap to the downside. This is this accumulation, which we broke straight through. So there will be buyers looking to buy there. However, it's got to be strong for Trump. Trump's got to say something to push this through at the minute. Yen is quite strong at the moment, as you can see. Yeah, so we've got a nice strong yen at the moment, but this is also coming off this low from September after the intervention. So this is the intervention low from last year. Obviously, there was no desire to trade below that level. We are in a very, very, very different world now. We've got more conflict happening everywhere, and we've obviously got Trump tariffs, which has caused this move. So whether that holds or not, don't know. But at the moment, your market structure is definitely potentially bearish. Yeah. So if we're going to continue as a bear move, you're shorting it here. Yeah. There's a nice divergence, which is bearish there as well. If that doesn't work out, you're scaling in up to that propulsion gap, and you're looking for a 71 retracement on that leg. If that doesn't work out, you're looking for a double top there on 3 positions to scale out on that leg. That will be your profit. If you're bullish and you think we're coming off these lows, you're going to buy these propulsion gaps and you're going to trade it up into there. One of those is going to happen. So just a case of deciding which. I'm not in that at the moment. I'm actually in Swiss yen at the minute, short. Again, this was not quite an RSI, almost, but I'm looking for these. I was looking for a lower high, basically. We're basically contracting at the moment on the Swiss yen. So I'm just looking for a push down into propulsion. In fact, I'm just going to put my TP at ADR, which isn't a lot. So I'm looking for targeting around about 3/4 of an ADR on that. Not getting greedy, but just try and get out in that propulsion gap today. So those are your RSIs. ADRs, we're flat. ADRs, AWRs on the weekly, we have got US dollar CAD. So if I put the start of the week in, Thursday, Wednesday, Tuesday, Monday, yeah. So there's your weekly range extension. US dollar CAD, we've done 150, US dollar CAD, done 150% of the weekly range. We did almost 100% of the weekly range on Monday, but 125 got hit on Tuesday. We bounced out of that multiple times. We didn't manage to get through it. We just tapped 120, 150, just about that. Actually, it says 191.9 and it's 192. Quite sure why that's signaled, but it's obviously 191.999, I guess. But anyway, so we have signaled it. Just 150, and it's bounced beautifully. Lovely reversal alert on the 4-hour there. The reversal alert went in yesterday on the hourly. Sorry, not yesterday, day before on the hourly. And there's your retest. So lovely bounce. But most of this, this is not normal price action. This is all Trump again. All Trump. So same old thing. New Zealand dollar, US dollar. That is extended on the weekly as well. So we got the weekly extension on that really early. Sorry, I was on the wrong. That was completely wrong, what I just said, because I was on a 4-hour chart. Weekly. I thought that was a bit of a big move. I was like, what? Yeah, so ignore what I just said on the US dollar CAD. The US dollar CAD one, 150, is to the upside. So it's a good short opportunity. Let me start that again. was looking at that chart and I was looking. It's because I've had a bank holiday Monday and I've only streamed twice this week. It really puts me out of sync. I was looking at that move thinking, I thought we'd not moved anywhere near that much, but obviously we did. US dollar CAD, there's your weekly, Thursday. I was looking at like 5 weeks there. Thursday, Wednesday, Tuesday, Monday. There's your Monday low. So your Monday low went in midweek. So that reversal that you've just got now is a 150 upside, potentially back down into there today. So that's actually not a bad setup at all. New Zealand dollar, US dollar. Upside to the downside. So potentially lovely 3-bar reversal there. Look at that. Beautiful textbook. 3-bar reversal. Propulsion holding. Like that. So this propulsion gap here, we bought. We just rebought that with an RSI extension. Kind of overexposing myself on Aussie New Zealand there, but I like the look of that. It looks really good. So beautiful 3-bar reversal and a retest there. Your reverse alert's not going to go in on the hourly, but your 15-minute just had it. So there's your 15-minute reversal out of propulsion. It is kind of just basing. If we break that high, I think we've got a good chance of pushing up today. It's going to need a hell of a move. So that US dollar has got to drop today to cause that. And obviously, I just get this feeling Trump's going to say something today that's going to rally the market. But anyway, we'll see. So there's an opportunity there, but just be, you need to stop on that. I wouldn't want to get into a position on it. Pound US dollar. So that one, obviously, again, rallying at the moment. Is this the pound rallying or is this the US dollar dropping? Pound is rallying this morning. And the US dollar is dropping at the same time. So pound US dollar obviously having a whale of a time. You're just about to get a reversal alert on that one, back up into propulsion. You've got plenty of room. There's ADR. So there's no reason why we shouldn't get that propulsion gap tested today. So you can always look for pullbacks and push up. So drop down lower time frames. And look for pullbacks into propulsion. You wouldn't want to get really down there, but some kind of pullback on that leg there for another potential long today. Looks good. So that's a reversal. That's your weekly range hit there. We've also got the pound New Zealand. Again, got a strong pound at the moment. So that's your weekly. Reversal, that's not going to trigger until you're halfway down. But beautiful bounce off of the weekly highs there. This is a previous weekly level tapping into. Great. And Aussie US, which I've got shorts on at the moment. Just getting out of that. I'm just going to take that off. US, just stick it in the bank. Don't like the look of the bounce on it. So we are obviously, that is your weekly range. We've just had a reversal, which is retesting in propulsion, and we're just breaking highs. I'm out. So might as well just get out of it. Break even on that. I've already banked on it once. So this is second bank on it. So done. Out of that. So yeah, potentially that's, you're kind of missing it though at the minute. Looking for a push up into propulsion. So you're either going to come back up into this support resistance propulsion gap here and sort of bounce out of that, or you're going to come up more lightly and test that one. Which gives you a new market structure low. There and then back out. We will see. DAX is triggered long, stopped out on the FTSE short. Market's dead today. Look. No volume. We are definitely bullish on DAX though. So we are breaking out into new highs on the DAX. Weekly. So this blue line here is the 2-month high. So this is your high from March. So as you can see, we're at a new all-time highs basically on the DAX. So complete recovery on the DAX now and breaking new highs. So off we go today. So we'll see how far we can get. Obviously, when you're breaking new highs, it's unknown how far you're going to go. So it's as much volume as there is available. There's really big gaps to the downside to fill as well still. Obviously Trump based, but watch ADR today. So if we're going to break to the upside, just watch the average daily range. And, you know, when you start getting to ADR, probably get some profit off, but we're off potentially. That's not exactly setting the world on fire, is it? It's actually failing. We'll see if we can break it. So yeah, one loss so far this morning. Obviously, if the DAX does manage to rally through and break those all-time highs, that will give the FTSE a little bit of a boost as well. FTSE's got lots of upside resistance, though. We're kind of in a flag at the moment. So if we break long today, I'll be looking for it to push up into here. That's where I'll take partials. And then obviously go with the DAX if it can. The DAX has got to get a move on first. Looks like it's trying. I wish I could do the testing for you. I got stupid futures in the US to deal with. Price action is the same though for Tally. But you probably haven't got DAX. If you got DAX futures, price action on futures is exactly the same. Look, I've got futures here. Look. So this is the S&P. Oh God, what a horrible chart. I haven't really got any decent charts. So that's the S&P 500, which is the CFD. This is, let me just get rid of that. A minute. Wow. I went very moving average. Happy on that. Why are so many moving averages on there? I haven't got to full. And this is the S&P futures. Yeah. You're going to get slight differences, but overall, it's the same thing. Yeah, price action is price action. The price is different. That's really the only difference you're going to see. Yeah. So you're going to get slight differences in price action caused by spread and obviously broker differentials. But at the end of the day, it's so marginal. Yeah. Behind my head, but you know, it's the same thing. So futures is irrelevant. Data's data. Price action's price action. If the futures exchange is going up, the CFD is going up with it. The price quoted is going to be different. Yeah, so we've got 56.76 and we've got 56.94, but that's the only difference. Price action is the same. So if you're testing a strategy, which is a pre-market range breakout, the pre-market range is going to be the same on CFDs as it is on futures. So you can do all the testing on the futures market as well. In fact, futures market, obviously, because it's a centralized exchange, is slightly more stable and slightly better to test on. But obviously, you are going to be restricted because you can only trade single contracts, whereas we can trade fractions of contracts. Swings and roundabouts. Trading's trading. Stuff goes up, stuff goes down. That's all it does. Okay, so ADR today will give me a TP on this in propulsion, Euro Swiss. Morning, Ace. I had a look at your strategy yesterday. I actually messaged you, didn't I? Can't automate that. Not possible. Too many variations in it, unfortunately. I have no AWR or AMR lit up on my dash. Well, something wrong with your dash then. I've got no monthlies, but weeklies we have. Weekly ranges, I'm using the same. I haven't changed. Oh no, sorry, I did. I changed them to 2. So yeah, AMRs I'm using 1, and AWRs I'm using 2 at the moment. Just while we're in this, in fact, this is probably an argument now for moving back. No, actually, I'm going to keep it as is. The trouble with ADR, AWR 10, which is what I used to use. Did I use 12? I can't remember. There's very little in it. You're going to take into account this week and this week. Yeah, and that week. So what I'm trying to do is filter that out, because these are outliers. These are anomalies. This is not normal market movement. This is the Trump moves, basically. So I'm trying to filter out those just to give me, what are we currently doing post nonsense, basically. So all of these moves which are manipulated by Trump, I'm just filtering those out. If you include those in it, your AWRs are going to be wildly higher than the average week. The average week at the moment, you can, in fact, now there's an argument now for using that as well. So that's 1, 2, and 3. So AWR 3, if I change that to AWR 3, I'm smoothing it out a little bit more now, but you're still going to get roughly the same figures. So we've got 125 hundreds, 125, and a 150. So if I change that to a 3, yeah. So there you can see it's made a slight difference to the US dollar CAD, because that was literally 1 micro pip away from the max anyway, wasn't it? So we've lost the weekly range on one of those two. Can't remember which one it was that was led up, but AWR 3 kind of smooths it out a little bit more. So, but with this is the thing with ADR, with AWR, with AMR, they're all the same thing, in that they are just indicating when something has gone beyond the norm. It's not exact. There is nothing exact about ADR. There's nothing exact about AWR. They're averages. Same as a moving average. There's definitely nothing exact about a moving average, is it? It's the most useless thing on the planet. But these are just roughly, what do we do? So, when I'm buying something like I am here, roughly how far am I expecting it to get today? Somewhere around there on average. But it could go here, it could go here, it could go, it's just a rough figure. So something lights up your AWR 2, but doesn't light up your AWR 3, it means it's moved roughly around the average it does in the last few weeks. But, you've got to pick one. There isn't a right one or a wrong one to use. It's pick one. Yeah. What's the best RSI to use? 10, 14, 12? I don't know. They're all good when they work, but they're all just numbers. You can pick whichever one you want. They're different, but they're no better than each other. They are just telling you it's moved. Yeah, we know it's moved, but these are for signaling. Yeah, if you've got the time to sit in front of your charts like I do, all day long, every day, and every now and again you're scanning through everything, you don't need indicators. Yeah, if this thing suddenly goes bang, 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 bang up to here by the New York Open, I can tell you that RSI will be extended. I don't need to look at RSI to tell you RSI is extended, because when price goes, RSI goes. It's a lagging indicator to price. If it was to move up to there, for example, the old weekly high, I would probably be able to tell you that that is a weekly range extension, only because I could go out into a 4-hour chart and go, well, last week it did that, last week it did that. If it does that, it's probably hit roughly the weekly range. But if I want to be signaled and told that that's happened so I can then analyze a chart, that's what the dashboards are for. That's what your indicators are for. They're to ping lights at you and go, oi, have a look at this. It's on the move. Which one is the right setting? Don't know. You can change it. One of my old mentors, every year he used to pay a guy. I don't know why he didn't do it himself, but he used to pay a guy to analyze all of the moving averages and come up with the best moving average last year. So basically what his goal was to, on the daily charts, was to find the moving average that was respected the most throughout the year. Yeah. So what he would do is like change that. So that's a 24. So try the 34. How many times did the 34 get hit? Well, the 34 was better than the 24 last month and the month before, but it was absolutely useless before that. But the 34 is better to use than the 24. So what he would do then is the next year he would use the 34 moving average, which I thought, that's brilliant. So you're just adjusting your indicators to how price is performing at the moment. What I didn't realize was it was an absolute waste of time, because all he's done is he's curve fit his indicator to last year's price action. That's got absolutely nothing to do with this year's price action. What happened last year is irrelevant. It's happened. Yeah. Trump wasn't in power last year. Do you think anything that you look at last year is going to have any relevance to this year? No. We only had one conflict going on last year. 2 conflicts going on last year. We've now got 3. India and Pakistan. Do you think that's going to make any difference to the oil price? Yeah. Do you think it will perform the same as last year? No. What's the point in looking at last year's price action? Irrelevant. So, all indicators do is tell you what's happened in the past. Every day, you have a 50-50 shot of that doing that or that. There's no indicator on the planet that can help you with that. But if something has moved, we know that there's a good chance it will undo some of that move before it continues or reverses. So that's where your RSIs, your weekly range extensions, your average daily range extensions, they all come in to mean reversion. But which one to pick? Don't know. And again, I'm fine-tuning this at the moment based on what I'm seeing and what I want to filter out. Whether I should be filtering it out or not, I don't know. If I reset those back to defaults, which is 12s, nothing's hit apart from that, US dollar yen. Yeah. So because these ranges, these weekly ranges, are incredibly skewed by 3 weeks worth of price action, which was 6-7 times normal. Way bigger than normal. I don't know how many times bigger than normal, but a lot bigger than normal. Look at the pound US dollar movement. Yeah, these are normal weeks. Yeah. Then we got these huge weeks, which completely throw out everything. They're sort of 2 to 3 times the normal size. So you're expecting the market to go 2 to 3 times the distance to trigger. It's not going to do that. It's only going to do that when Trump does something crazy. Obviously, if he does something crazy, nothing we can do about it. But you just got to kind of, you have to adapt. This is not, I keep saying it, there isn't a way you can have the same indicators and strategy working all the time, because the market is not the same all the time. It changes constantly. It evolves constantly. The deviations it uses are different constantly. The ranges it moves in change with interest rate differentials constantly. Economics is moving constantly. World balance is moving constantly. The currencies we use are moving constantly. Nothing's the same. So you go with rough. And this is why position trading works so well most of the time, because it's all rough. Yeah. I reckon that the Aussie New Zealand's coming down at some point soon. When? I haven't got a clue, but I think it'll come down some point soon. So I was expecting it to come down from here. It's not. So I would expect it to come down from here. If it doesn't do that, it's going to double top, isn't it? So I'm going to get a V-shaped recovery on that down leg. So then I'll expect it to come down from there. It's all incredibly rough, but it means that I don't have to worry about being right all the time. And that's the thing that everybody gets wrong. They're always trying to be right. You're trying to get a high strike rate. You can't get a high strike rate on something that is chaotic, random, and has a 50-50 probability. You can't get anything higher than 50% because there is only a 50% probability. You can control risk reward, but all that's going to do is stop you out more, which means your strike rate is going to drop. So, this is indicators are fantastic for alerting you to situations. But your job is to analyze the situation, look at your portfolio and decide, shall I or shan't I? If it gets there above 80, absolutely brilliant entry. Whether it works or not has got nothing to do with the indicator being above 80 and that previous price point that they sold at here. Because when we get here, the guys selling here, their bias is different. So they were selling it here because of X. Now we get back to that price point. That X doesn't exist, but Y does. So it would just blow straight through it all the way up to here. And you'll be going, wow, that moved 300% of ADR. Yeah, it can do. It's got nothing to do with this. This is all rubbish. But you've got to have a strategy. You've got to have a system. And a system has to rely on conditions. That's the condition. Condition is it's moved up. Brilliant. So let's try it the other way because it's done that. We've missed it. So let's try and get the opposite. So if Trump doesn't pull any more Trumps on the FX market, we could increase the weekly AWR by 1 each week. Yeah. So, that makes sense. If you look at, the weekly, look at the weekly ranges. This is a big week. This is a normal week, fairly small week. That's a Trump week. That's a Trump week. That was a Trump week. But that was, the thing is, the main thing you've got to factor out of all of this is the main outlier, which is the introduction of the tariffs and the removal of the tariffs. So those things need to be removed. So at the minute, if you look at each instrument, you kind of almost want a different weekly range on each instrument because different instruments have been affected in different ways. But it's hard to really gauge what a normal week is going to be moving forward from here. So at the moment, a normal week is kind of rangy or maybe one big day. But the one big days are at the moment kind of, the 200 ADRs. And then we sit around sideways. So for me, normal price action at the moment is like this. I don't think we're going to get any parabolic moves because there's no currency that has a specific advantage at the moment. Interest rates are all stable. Inflation is all stable. Interest rates are all starting to come down, apart from Japan, who obviously need to increase theirs. The US, no one's got a clue. And this is the problem. The US is the anchor currency for all FX trading. The vast majority of all transactions worldwide are done through the US dollar. That's the thing that's in absolute chaos and turmoil at the moment. So you cannot pick a norm. There is no normal anymore. And this is where everybody's going to get stuffed. You're going to see on YouTube probably, because I've been through this sort of situation before, you're going to see on YouTube suddenly people coming up with loads of different strategies and that no one's ever seen before because they fit what we've just seen. But this isn't normal. They will all fail. And then people will go back and people just hop around not realizing that the reason the strategies are failing is because the market conditions are changing. There's nothing wrong with the strategy. It's not going to work in all market conditions, which is why you need something that works in most market conditions, which is mean reversion. Because if the market is range bound, mean reversion works. We reverted that move. Yeah. If the market is trending, mean reversion works. We revert the trend. It can carry on going up for years. I don't care. As long as it goes up like this, yeah, you can mean revert it. If it goes sideways, you can mean revert it. If it goes parabolic, you can't. So what does the market spend 90% of its time doing? going sideways or trending. What should you be? A mean reversion trader. So people will flick now onto these really strong breakout strategies, which will suddenly start to fail because the market won't start breaking out. Breakouts usually work 30, maybe 40% of the time on some breakout strategies. Look at ORB. Yeah. We're going to have 2 losing trades this morning. Why? Because the market normally tries to break out and fails. That's normal. But when it does break out, we get really good risk reward. So what we do is we lose the majority of the time, but when we win big. And then we pay for the losses. That's what a breakout strategy is. But it won't work if the market is going sideways for days and days on end. It will just take loss after loss after loss. But that is all reflected in backtesting. Yeah, the backtests for all breakout strategies go like that. Yeah, you have these big runs where it doesn't work because the market is either really strong trending or in a parabolic move. It's not breaking out orderly. But you know, that's the missing piece for most people. This is why you see the system hopping, because they try something, it works for a short period of time, and then it stops working. So they go, it doesn't work. It does work. It's drawdown. Totally normal. There's no trader out there that's got a 75% strike rate consistently. Yeah, they will have a run where they lose over and 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 over again. Yeah, if you're discretionary trading, you can do it, because you're trading what you see. You're not trading a specific strategy. You look at most traders who are scalpers. Sometimes their trades will be breakout trades. Sometimes their trades will be mean reversion trades. They'll be reading price action like that and going, that's a great short. Now, it may or may not work, but if it doesn't work, what they will do is they'll become a trend trader. They flip. You've got to be able to switch to the market. So this market right now is mean reverting at all-time highs. Yeah, that 3-bar reversal was your short signal. If that short signal had failed, it's clear that we are going to trend today. So you become a trend trader and recover your losses. That immediately gives you a 50% strike rate. But if you are only a mean reversion trader, you will just keep reverting the mean and losing all day long, potentially. But that doesn't mean your strategy doesn't work. Mean reversion works most of the time. It just doesn't work very well in a strong parabolic trend. And if that's what we get, you fail. That's trading. That's normal. You can't do anything about it. I'm going to stop out on this. So whipsaw today on the FTSE. There you go. Perfect example. 2 losing trades. Why? Because it's a breakout strategy. We haven't broken out. Does it mean it doesn't work? No. It works all the time. When it works. When it doesn't work, it's when it's doing this. Just accept the losses and move on. Yesterday, at one point yesterday, I was 1,600 down. Ended up 300 up. Why? Because it broke out eventually. Yeah, but while it was thinking about breaking out, it was hemorrhaging cash. Then it broke out and it got all that back because it has a risk-reward ratio which is positive and it uses loss recovery. Yeah, it flipped. The market flipped into the right condition for the strategy. So, right, there we go. That's all I've got for you today, really. So be aware, obviously, this afternoon, I'm back on at 2:30 this afternoon for the open. 1:30 unemployment rate. So that's going to be your main market mover today. Unless Trump comes out and says something else, which is obviously possible. That's the other thing I was going to cover today, the greed. So obviously you've seen the DAX now at all-time highs. We were down in 4, extreme fear 4. Never seen it down there before, but that's where we got. That was during the collapse. So the market has now got confidence. And I think the confidence has come from this 90-day pause. So what he's basically said is, I'm not going to put any more tariffs on you. But he hasn't said he's going to take them off. It's now everybody come flooding to me with your offers and we'll negotiate, basically. So as deals start to get struck, the market will have more confidence in the economy. So this is why potentially we could see this strength coming through in the US dollar and unlikely interest rate drops. But we are back in greed mode now, which means bull days basically most of the time. So we should be looking at indices kind of going back to a long bias more than short. And obviously you saw that yesterday, lovely big breaks up, but the downsides are going to fail. So buying dips is good, but as you can see, it's not quite there yet. And I'm still unsure as to whether really we are back in a bull market. If you look at where we are with the S&P, since Trump got in, obviously he's going to make America great again, which is making the economy great again, which is making the stock market rally. And so far, good job. But this is only a couple of months, isn't it? So undoing of the tariffs, adding the tariffs, undoing the tariffs, market in that tariff pause has got this, where this greed has come from. They're getting a little bit more, okay, it seems like it might be returning to normal. One wrong move, this is going to come back down again. So if you look at the structure we have at the moment, yeah, this is a bear pullback. Go back and look at the previous bear market that we had and how that started. It tends to start with something similar. Yeah. Obviously, that's not the big bear market. That's the big bear market. So, we start with a pullback and then we continue, and then we pull back, and then we continue. Yeah, it's just a trend. It's all, a bull market is a bull trend. Bear market is a bear trend. Trends pull back. So, this is kind of a very decisive point we're at here, because this is going to decide whether or not we are going bull or bear. If we break that monthly high from last month, it means that we've just basically undone last month. So the monthly candlestick looks like that. So a huge hammer. Brilliant. Super bearish. Bullish, rather. But, it's not guaranteed, is it? So that's where I'd like to see break. If we break back above there, I think we're going to be back in bull territory. But we've got a long way to go yet. Yeah, we've got another month, maybe 2, before we're challenging these highs. Could happen faster. But yeah, just wanted to, obviously, there is market confidence coming back in now. So it's kind of a very sensitive, I think, week this week and next week for whether or not we break these highs and start going back bull. Nothing else has happened this morning. So, right, I'll leave you there. Anything else you need, let me know. I'll be back this afternoon at 2:30. We'll trade the US session. Not stopped out on that yet. Nice big wick rejection there. So we might do that. Log on the DAX as well. So whippy morning, unfortunately. Right, yeah, so back at 2:30 this afternoon, we'll have a look at the US indices, see where we go there. Anything else you need, I'll be in Discord or Telegram. And have a good morning, and I'll see you later.